Hey, this is Justin with DayTradeThe Markets, and today I wanted to look at this idea that we call confluence trading and then show a really nice example from the E-mini S&P chart today. But let me break down confluence just a bit. If you're not familiar with it, it's basically having the patience and discipline to wait for several pieces of evidence to come together or to line up. And that leads to what we consider to be high probability trading opportunities. And notice I said high probability trading. I didn't say 100%. This is a probability game in trading, and what you're trying to do is increase your edge as much as possible, or give yourself the biggest possible advantage you can, knowing that you're never going to have 100%. Nothing's certain. But if you can stack the odds in your favor, you know that you have a pretty high probability opportunity. And so the idea is to wait for 2 or 3 or 4 of these pieces of evidence to come together. And by pieces of evidence, I mean these pieces here, these building blocks, so to speak. And we look at them in kind of 2 ways. We have our bigger picture bias and our bigger picture support resistance levels, and we talk about those in our member center each night ahead of the next day. So it's kind of the homework, getting ready for the next day on the bigger picture level. And then once the session opens, we look at our intraday or our real-time evidence that the software produces, and this has various pieces of evidence like relative aggression bars and high velocity moves, support resistance zones that are drawn in real time, the directional bias filter that's in real time, and then deceleration as well. So again, if you can find a situation where 3 or 4 or 5 of these pieces of evidence come together at the same time, you know you have a pretty high edge trade. So to demonstrate that, let's look at a situation today in the ES, kind of a textbook confluence opportunity, you could say. Okay, so here's today's E-mini S&P chart, and I know it's kind of scrunched together and might be hard to make sense of at first, but I wanted to show the whole day on the chart, and I'll kind of break this down. And by the way, we have other videos. If you click on the other day trading videos below after this video is over, you can see there's a video that I think I called it building a chart one step at a time, where you can kind of see how this kind of all comes together, each piece of this. It might be interesting if you're not too familiar with this. But looking at today's action, what we like to do going into each day is to talk about that bigger picture level. And what you do is you simply log into our member center and you look at the report we produce. And so today, as long as the market could stay below 4250, our bigger picture bias was down. And then we were looking at a few levels that were near the market, the 4250 area, which is a little bit higher than this chart. And what I recommend each day or each night before the next day is to kind of draw these lines actually on your chart physically. We were also looking at this 3150 area, which we wanted to see if that could hold, and then the 2550 area as well. So again, heading into the day, you have these levels, and you're kind of waiting to see what the market will do at those levels. So that's kind of our bigger picture overview, or kind of setting the stage for the day. Now once the day opened, you can see the first couple of hours of trading right in here. Essentially nothing happened. We traded within a pretty 4-point range or so, had nothing but what we call level 1 buying and selling bars, which aren't telling us much. Basically in consolidation, nothing major was happening. Nothing really happened until we broke out lower on this level 3 selling aggression bar, meaning that on that bar there was extreme selling aggression, or order flow was telling us that it was extreme selling. And so when that happens on the low of the day, it's a pretty good sign that this market wants to continue lower. That's our first major structure. That's the first thing we were looking at. And generally speaking, not generally speaking, but our expectation is when we have a level 3 bar like that, our expectation is that the high of that should hold as resistance. Same thing, here with this level 3 bar that was a selling bar and so forth. And so what I want to kind of focus in on is this opportunity to sell right in this area, and let me kind of break it down piece by piece to help you understand why it's such a high probability trade, or such a good confluence trade. So if we look at this, if we got short here in this area, is it with our bigger picture bias? Yes, it is. We have our bigger picture bias being down, so that's kind of a +1 or a check 1. Do we have a bigger picture support resistance level to trade off of? Well, yes, we have this 3150 area here, which the market tried to bounce off a little bit here, tried to bounce a little bit here, and then we pierced it with with extreme selling aggression right there. So knowing that we've broken through that potential support on extreme selling is a pretty good clue that this level, instead of being support, now should flip over to becoming resistance. Okay, and we talk about this in our training, obviously. So that's kind of check 2 or +2 in favor of getting short in that area. Number 3, do we have a good structure with our aggression bars? Well, yes, we do. First of all, we have no major aggression in here. It wasn't until this level here, this bar here, this level 3 bar. Well, actually, we had a 2-tick level 2 selling bar, and we're down below that now. So that's negative structure. And then we have this level 3 selling bar, which sold off below the low of that bar. And again, our expectation anytime we have a level 3 selling bar in this case would be that the high would act as resistance. So that certainly is a check or a +1 in our favor. Do we have our intraday or real-time support resistance zone to trade off of? Yes, we do. We have this red zone right here, which is our intraday resistance zone. So that's telling us that that's kind of +4, check 4 for this trade. Do we have our directional filter with us? Well, yes, we do. It on that breakout lower with the first major structure, it's telling us that the order flow is telling us that that sellers are more in control of this market. So that's check 4, +4 in favor of getting short in that area. Do we have a deceleration? No, we don't. But we have, a good 5 pieces of evidence to trade off of right here. So 5 things came together or formed confluence right in here, and you can see that was kind of a really nice opportunity to get short, and it sold off pretty nicely. It actually sold off right to our next support area at 25.50 that we were thinking about heading into the day. Okay, so that's kind of one of those ideal scenarios for a confluence trade. Now, as we go further into the day, if we look at this, you might say, okay, what about getting short here? That certainly had some pretty good opportunity. The one caveat being that this 25.50 area might act as, on a bigger picture level, might act as some pretty good support, and the fact that the market bounced off of there earlier gives us a little bit of pause. But certainly if you got short in here, you had the bigger picture level. You did not have this, so that's kind of a negative one right here. You had good aggression bar structure. We'd had no positive aggression bars that had shown any follow through at all. It'd been all negative all the way down. So that's kind of in your favor. You were trading off of a resistance zone, and you had the filter. So certainly high probability to get short in here. And if you did, it didn't kill you. Probably a break-even trade depending on how you manage trades. Here's another opportunity. This one's a little bit better. Where you can see we have a resistance zone, we have the filter, and we have a little bit more room to move before we hit this 25.50 area. So just giving you a few ideas of how you might use this in terms of a confluence type of an idea. And you don't just have to trade confluence, that's just one of the ways that we like to, it's a very high probability way, but it's one of the ways we like to look at this. We also have other trade entry concepts that we use based off of aggression and high velocity, and we have some fade moves, some reversal moves, and some things that are pretty high probability as well. If you're interested in seeing some of that, just shoot me an email and I can send you over some information on that as well. But hopefully that made sense in terms of, I guess the goal for this video was simply to talk about this idea of confluence, and then just to show a really nice example, and hopefully that made sense when I kind of broke it down piece by piece. And that's really how you would want to trade if you're using this method. Is when you're thinking about getting long or short at a given time, you can kind of go through that checklist and give yourself +1s and -1s, and you know that if you have when you cumulatively add those up, if you're +3 or better, it's a pretty high edge trade. And if you just kind of stick to that idea of waiting for situations where you can define pretty clearly that you have an edge, over time you're going to do pretty well. So that's the idea. Hopefully I was able to get that across. If not, shoot me an email. I'll try to clarify it more fully if you have other questions as well. But otherwise, have a good evening. Have a good Thursday, I guess. It's already Wednesday. And we'll talk soon. Thanks.